Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. It is Thursday, and the market is down once again. It just seems to be kind of, we went through that almost follow through day there, and it just didn't work. I mean, it just didn't work. Kind of want to show you the indexes here. The Dow is down about 0.62%. S&P 500 is off about 0.5%. And Nasdaq is down, and that's down about 0.83%. And the Russell, that's the small cap index, is down 0.36. So, what's going on here? Well, I think that, obviously the follow through day that we had didn't work. And so we're now back to a downward trend on the market. So let's kind of go over just some of the charts here first, and then we'll get into the questions. I want to look at the Nasdaq first, of course, because that's where all of the stocks that we like to trade hang out. And of course, that's where all the tech stocks are. But it's not been doing very, very well. As a matter of fact, it has been the worst 6 months for the Nasdaq since the 1970s. Hard to believe. So we're definitely, moving, unfortunately, in the wrong direction. And but let's analyze that a little bit so we can take a look at it. And so basically, what's going on here is we have the Nasdaq. We did rally basically on Friday. We rallied, and then we pulled back down below that 200-day. Below the 21-day moving average, that's right here, and then below the 10-day moving average, the relative strength is lower, and we have, at least for what I can see, a lot of bars on here, and it's moving lower. So not necessarily the greatest thing out there. Let's see, make sure that I've got my sound going correctly, because sometimes I do have problems with that audio. Yep, it should be going good today. This is kind of what the Nasdaq is looking like. Not looking very, very good. Let's kind of compare the Nasdaq with the S&P and the IWM. So let's kind of go here and see if we can look at kind of what's going on in general. So there we go with the okay. So that's the Nasdaq, and then let's add the S&P 500. So that's the Nasdaq versus the S&P, and then let's put in the Dow. Kind of just give you an idea, sort of how how poor this first 6 months has been. This is the Dow Jones Industrial, almost following the S&P, and then I think we've got the Russell. Let's put the Russell in. The reason I'm trying to find the major indexes here. Let's see if this will let me do it. Russell. Yeah, okay, so let's look at the Russell 2000, because that's really the one that is the most important here. Okay, so we've got them all basically looking. This has basically been since the first of the year. This is January, of course. Here, we started up. We have been just in this downward trend on everything. Now, the Russell and the Nasdaq have done worse than the S&P and the Dow. The S&P and the Dow pretty steady. Well, not steady, but pretty similar. The Nasdaq and the Russell not doing nearly as well. not doing as nearly as well there on those. So just a tough market to trade right here. So let's get back to the screen. I hope I'm still open there. Just too many things here. So let's see if I can get back to the screens. All right, so that's kind of what's going on. No, let's cancel that. Okay, I have an issue there. Oh goodness gracious! So let's just see if we can not share out the screen. So sorry about that. We just a little bit too much technology. A little bit too much technology there on that, but that kind of gives you an idea of what is going on here. Wanted to show you I wanted to show you another thing. This is on Coinbase, of course, and this is sort of what's going on there. Um, the Bitcoin has dropped significantly, about 85% in quarter two. It's dropped about 58% in value. Coinbase, and this, I'm really considering this one might actually go out of business. I don't know. It's down about 5% today. Of course, this is where a lot of people trade their Bitcoin. As far as I know, they're still exchanging Bitcoin for dollars. But if you do have anything in there, I really consider possibly, making a move to. I would consider possibly taking, try to redeem your Bitcoin or move it to another wallet or something like that. Because really, what I think is going to happen here is Coinbase may come under attack and get very, very. It may be very difficult to put to pull money out of there. So I would, if you you probably want to take your Bitcoins back, maybe put it in a private wallet or something like that. But it's just too dangerous right now. I think that we are going to go lower. Bitcoin did move down to about the 18,000 level today, and I do think it's going lower. I truly believe that. So let's kind of look at that BTC. See if I can pull that up on the screen for everybody here. All right, let's do that. And this is something that just want to warn, maybe not warn you about. I mean, I think that's too, that's too dire. But I just think you need to be very, very cognizant of what's going on with Bitcoin. And currently, Bitcoin was down at $1,200 today, about 6%. So that's quite a bit. And as you can see, from 20,000, this is basically, so we're starting to see people withdraw lots and lots of cash. So we're right, we've now moved below 20,000. This was support, and I do think that the next stop is going to be 11,000 on this. Now, here's the thing: if Bitcoin moves below 16,000, if it moves below there and stays there, it is very, very likely that Michael Saylor, who's one of the largest Bitcoin companies out there, with a company called MicroStrategy, he is going to get a margin call. And if he gets a margin call, he will not be liquid enough to make the margin call. So you want to be very, very careful. If you do have Bitcoin right now, I think you really need to protect yourself. I would consider either, moving the Bitcoin off, out of the, like a Coinbase, because I do think they may, and again, I don't have any inside information, but these things typically don't end very, very well. So I think you need to basically be very careful with Bitcoin right now. I would actually try to see if I could get it translated back into cash. If you can't do that, take the Bitcoins back, because I do think that some of these exchanges are going to have difficulties. So I don't have any inside information on this again, but that may be a case. So with Coinbase, I think you just got to be super careful. Some of the other ones, some of the other exchanges have locked up. They're not taking any. They're not allowing any withdrawals because they're illiquid in dollars. So that's something you want to be considerate about. The market in general is moving down in general, but Bitcoin in particular. So you have to be super careful here. Another kind of a bellwether stock that I think we need to look at very carefully is Amazon. This, of course, is a proxy for the retail. Now, the stocks that I look at as proxies for the retail environment are Amazon, Walmart, and Target. Target has been off, and Walmart has been down, and now this is sort of the third leg of the stool. This is Amazon. Now, everybody expected, Amazon to be able to continue moving, even better. But they did very well in the pandemic, of course. But now I think it's going to be more difficult for them, only because it's just a situation where you're going to see a lot more. You're just going to see a lot more pullbacks in terms of the. You're going to see a lot more pullbacks in terms of the economy. So one of the things you have to be kind of leery about right now is these retail stocks. There's a lot of weakness in retail right now, and so I think it's well worth taking a look at that. Let's take a look at the Amazon live chart. I'm going to pull that up now, AMZN. And I am not in this, but I like to look at this. This gives me a good idea of sort of what the what is the forecast on retail? Because typically, Amazon is sort of a proxy for for some of the retail sector, even more so than the XLP. So as you can see, we had a pullback. The relative strength on Amazon currently is 21. Of course, we have the split, so that's the reason for that low price. They're going, wow, that's seriously low price. Well, remember, when it split back here. Basically, it split back here, and it split 20 for 1. So that's the reason for why you have Amazon trading at essentially 105. But let's look at over kind of on the weekly chart, and this gives us an idea of sort of the consumer strength. During the pandemic, this was holding up very, very nicely. But since then, really since about January of the year, this has also been down. Of course, this is a Nasdaq stock. Relative strength on this one, 21. Now, I always look at this relative strength line. This is the blue line here. And as you can see, it's headed lower, as is the S&P. So this is underperforming the S&P 500, Amazon. So this is something you got to kind of look out for here, going forward. So right now, I think that, we want to stay. Currently, I'm totally short, and basically I'm short, and I have bear put spread. So let me show you a bear put spread that I put on today. This was on Snowflake, and Snowflake, of course, is a company that does data warehouses. Very interesting company. But what I did is I put a short on this one. This will, for everyone out there, if you're interested in, I don't know if you can still get these prices. I just did one contract, pretty simple. Pretty simple deal here. It's basically buying the September 16th 135 call, and then simultaneously selling the September 125 call. That's a spread of 10, and it cost me $435 out of my pocket. I have the potential of making $565, as you can see. So if the stock behaves itself, then I will do that. It's already up a little bit, not a lot, but up a little bit. And let's take a look at the live chart on Snow to see if we can bring that up. There we go. Getting better hang of this. There we go. So here is the chart for Snow, SNOW. Sometimes there's a little bit of a lag on my machine. I'm showing. There you go. There's the Snow chart. Remember, this was a recent IPO. Very, very heavily subscribed when it came to the investment community. A lot of funds in this one. I shorted it right about here. Okay, sort of as it came up to the 50-day line. As you can see, that's kind of the way it works. You have your head here. This is your left shoulder. This is your right shoulder. Now, typically, you want the right shoulder to be lower than the left shoulder. Not quite the case here, but it came up, and then of course, the whole thing started to weaken. This of course is called the death cross, and this shows this shows weakness. And then as it came down, and then it came down, and then it rallied up to the 50-day line, down again, and then it rallied to the 50-day line. The reason I shorted here was because at this location, it's part of the rally. So hopefully, if this one works out, we should see, we should see a nice return on it. Potentially about a 130% return over a period of 60 days. So that's hopefully if that happens. Now, what has to happen here, of course, the maximum return is only achieved if Snowflake moves below $125 a share. Currently, Snowflake is trading at $139.20. It bounced up a little bit after hours, but I'm sort of confident if we go to the 30-minute chart that I think we're going to see a further erosion. In order to make all the money, it just has to fall here. And we're actually just looking at the it has to fall from here to here in 60 days, and I think that's highly likely that's gonna happen. So that's the reason I opened this trade. So hopefully we'll make some money on this. I do have some other spreads out there, kind of give you an idea of sort of where that's at. I do have this spread on Costco. Costco traded up a little bit today. Also, Palo Alto Networks traded up a little bit today. So I did, but I did push these out. So I have a little bit of more time on that. Starbucks was down. I have a short on Starbucks. Bill.com, short American Express, and then Snow. So those are the ones I currently have a short on. I also did close the short on Hershey. Unfortunately, that one was not nearly as successful. I had to close that at a loss. So you win some, you lose some. It was a pretty small position, so hopefully it won't affect things too much. But so looking at the live chart, see if I can pull that up. Live chart for the for the trades. Let's look at them real quick. Just gonna kind of put this up on the screen. Okay, let's see if I can do that. All right. So basically, these are the trades that I have currently. This is the Snow trade, and as you can see, it's gonna populate the screen here in a second. There we go. So we're already up $24 on this one. Of course, we're hoping that over time this will fall to about 125. If it does, then we will make all the money on this one. So hopefully, we're starting out right and we're moving forward. Now, unfortunately, the American Express trade, it traded up and it still has to move down. It's actually doing fairly well as well. It's up as well. The current value of this is about $54. Hopefully, as the time goes on, as you can see, if it falls, then we'll be making all the money there. So that kind of gives you an idea of kind of where we're at in terms of some of those spread trades. The spread trades are a really good way to deal with it when you're in a situation like this where to go long just really isn't working in this environment, just because it just isn't working because the market is falling. So in a falling market, you just have to it's just one of those things. You just got to be very proactive. And one of the great ways you can do that, of course, is with these bear put spreads. If you're interested in finding out more about them, I do from time to time put out some stuff on the Action Trailer. It's very, very easy to get on that. Just go to www.Dallas Trading Floor. So let's take a first question from TikTok. Thank you, everybody, for waiting. Really appreciate it. By the way, if you're watching on TikTok and you want to see these charts that I'm showing, I can't show them directly on YouTube. On TikTok, but I can show them on YouTube. So the way I do it is I broadcast on YouTube simultaneously with TikTok. All you have to do is go to the profile and click on the link, and you'll see the link directly to the charts on the YouTube feed. So thank you very, very much for that. All right, let's take a first question. Thank you very much. Are you still hanging in there? Absolutely, I am. Absolutely. What are you doing? Okay. Let's see. Apple. Let's take a look at Apple. Apple has been down today. That's sort of a proxy for a lot of things going on in the market. But Apple, definitely is down. And let's go and take a look and kind of see what's happening, there on Apple. So let me pull to the next window. There we go. All right. And we're going to go to the daily chart for Apple. There we go. And sort of what's happening with Apple here. Let's go to that daily chart. Well, so for some reason it doesn't like it. AAPL. Sometimes my system is a little bit. There we go. There's Apple. All right. Here's the situation with Apple. We've got, again, it's very much mirroring the Nasdaq here. We've had this essentially since about April. We've been in this downward trend. We rallied up here to 179 and then we've pulled back. We have the death cross on it, which means that this is probably going to go lower. And this is basically where it's crossing. The 50-day cross is the 200. So that shows weakness, as you can see. That's definitely been the case. You'll notice how this pattern is starting to break down. It comes down, it rallies to it rallies to the reversal line, then down and then up again. So part of the problem right now is Apple is having difficulty staying above that 21-day exponential. So let's kind of look at the technicals to see sort of, I wouldn't short Apple here just because, Apple can really surprise you. It's so widely held. There's a lot of things, but we are definitely trading below that 21-day line. Now, here's the thing. If you do want to short it, now I'm not going to short this, but if you do decide to short this, you want to short it as close to the 21-day line as you can. Right now, it's 2.1% below the 21-day line. So this isn't a bad place to short it, actually. It does look like it is struggling here, and it looks like it may move lower. Now, I like to short off the 21-day line because that, in my experience, that's one that if it's trading below that 21-day line and struggling to get to that 21-day line, more than likely it's going lower. So I know that's not really great news that you want to hear. Now, here's the thing, and I always say this, and I'm sort of like a broken record. If you're down more than 7% on this, consider selling it. But remember, you can always buy, you can always buy a stock back. Remember, you can always buy a stock back. And if you sell it now, you're going to preserve your capital. Don't ride this one down. Even though it's Apple, I mean, this could easily be a $100 stock by the end of September. I mean, that's not inconceivable that this one. So just, to save yourself a lot of pain, if you're down more than 7%, I really think that, you might want to look at possibly selling it and finding, a better entry point. Because right now, if we're looking at it, there is a floor on Apple, but it is, it's lower than it's lower than you probably are interested in seeing. I think there's a floor at about 120. If it falls below 120, it's going to go lower than that. But right now, Apple's floor right now is about 120. So we are rallying up to that 21-day line, but not a good place. So if you do have Apple and you're down more than 7%, consider selling it. Remember, you can always buy it back later. And that can be a very good thing. Believe me, it's better not to lose the money. It's better to keep the money and live to fight another day. All right. So Sandeep is asking about a 135-130 spread for July 15th or the naked put. So here's the thing. I always like to do the spread rather than the naked put. And the reason I don't like to do the naked put is theoretically with the naked put, you have unlimited risk. Now, I'm not saying that's going to happen in the real world, but potentially, let's say you could have that 130 put, and then all of a sudden, for some reason, Apple goes to 200. Well, you would have to cover. And so naked puts are not risk limiting. So I am a big fan of a spread. And the reason I'm a big fan of a spread is because it gives you a little bit of leeway. Now, if you did the 135-130 spread, and it fell, let's say, to 129, you'd make all the money on that trade. Okay. Now, if it stays above 135, well, you wouldn't make it. You wouldn't make any money on it. Of course, you'd have to pay for the cost of the trade. Now, if this was a debit spread, and that's what I think it probably would be, if this was a debit spread, you'd of course lose that money. But you remember, with a debit spread, you can actually roll those out. So that's what I've done when it hasn't worked totally for me in the right time frame. Is I've been pushing it out. I pushed out the Palo Alto Networks. I pushed out the trade on Costco. I have a bear put spread on Costco. I did a up and out, which is but I pushed it out 3 months, making sure that it's going to happen. So I think that potentially 135, 130 is not a bad trade. I wouldn't do the naked though. I wouldn't do the naked put. It's just I think it's really just too dangerous. Let's look at bear put spread on Charter. I think this is Charter Communications, if I'm not mistaken. It's funny. I had this stock years ago. I never made any money on this one. I remember it. I remember thinking it was such a great idea at the time. Wow, internet through, it just shows you how old I am. Internet through cable television. I thought, boy, that's really exciting. And of course, I bought it, and this is one of stock that this is when I didn't know to sell, and I just held on to it forever and ever and ever. I just lost money. I just slowly dripped away. It just was terrible. So, do you think a shorter than is good? Okay, well, let's see. So you're looking at a bear spread, and I like to do the put spreads, to be honest with you. So let's look at the kind of the parameters. Now, I think you could probably do one at the 21-day line. So maybe a 465, 460 might work. Yeah, so a 465, 460, and I would go out probably at least 2 months. I'd go out to probably the end of August on that one. I don't know if that would pay, but let's just for grins, let's take a look at that, kind of see what. And I definitely think it's in a downward trend, obviously, and that's good. That's good that you're seeing that. That it is in a downward trend. So let's take a look. See if I can get this here. So on charter communication, and I'm going to do I'm going to see if we can find something good for this. And what I'm doing here, everybody, is I'm trying to figure out if we can find a good, um, if we can find a good trade on this. CHTR is the symbol. All right, so I'm going to say the expected price on this one. Let's just see. I'm gonna look at the charter chart, and I think we're going to have an expected price. Let's say down here. So I'm going to say about. Okay. Let's see if expected price. So I'm going to look to the low at 407. So I'm going to say about 410 is going to be is going to be our expected price. Let's see if we can do that. All right. So I'm going to say about 410 is our likely expected price. That's what I'm going to do. Put in there. All right. Let's kind of see if we can find something. And basically, what I'm going to do is I'm going to go out to the end of August and see. Let's get a little bit. $750 for the budget. To take a look at some of the things that we can look at here. All right. So basically, what we could probably do here, and let's kind of look at some of these, is to look at a potential spread here. So we're looking at about entry costs. Okay, I'm just looking at 405 seems a little bit okay. So I'm gonna, that's a little bit aggressive. So let's see if we've got a chance here. And what I'm doing here is I'm using a site called Options Profit Calculator to calculate sort of some ideas in terms of the shorting there. So let's kind of look to see. It's going to take a bit. It's a little bit of work here. It's finding the right one. Okay, here we go. So none of these are terrifically high in terms of likely. Oh, there's one. This is a credit spread that might work. And it's got a little bit over a 50% probability. And this one you might want to take a look at for charter, for charter communications. This one will pay out about 360, 385. Not a tremendous amount. Remember, but there is about a $600 risk. So this doesn't have, this is a 62% return, which isn't bad, but it gives us a lot of flexibility. All this thing basically has to fall. It doesn't have to fall hardly at all. It has to be either stay even or fall just a tad, and we're in the money on this one. So this might work. You know, this one might work, Matt. Let's see if I can send over the link to it. So maybe I can do that for you. Oops, let's copy that. And let's see if I can put that out in the chat. But link to CHTR bear put spread. So if you just follow this link, this should give you a idea. You know, this is just a recommendation. This is not a, you know, this is not a recommendation. This is just a, you know, this is just a, so right there, and I just put it to the chat. And by the way, if you're looking on TikTok, no problem. Just jump on over to the YouTube feed, and you'll be able to see this. So that's not a bad idea there, Matt. Take a look at that one, see if it meets up, and then yeah, take a look at it. All right, let's look at PFE. This is Pfizer, or Fizzy. They used to call it Fizzy, but Pfizer. Let's go to the charts on that. One of these days, I'm going to get everything working in sync. But until then, you know, until then, I have to sort of switch around on these windows. So it's a little bit, you know, it's a little bit weird here. Okay. PFE. Oh, all right. Oops. So here's the chart for Pfizer. And Pfizer is moving up nicely. It is above that above the 200-day moving average. The 50-day was coming down to meet it, but it looks like it may be turning up. The important thing here to look at for Pfizer, to kind of give an idea of where it's going, is this relative strength line. And this relative strength line is very strong. It's moving up. So that means that the Pfizer stock is moving up, and against the S&P 500. So the S&P 500 is moving down, as we indicated, and the Pfizer is moving up. So the relative strength is improving on this one. It's already pretty high. It's 60 at 90, 94. So if you wanted to go long, this is definitely the area of the market that you want to be looking in, and that is the medical area. That seems to be doing the best. Now, I am not long anything currently. I closed my short. I may close my long on the XLE. I'm not even in the XLE. That's, of course, the Energy Select Spider for the energy sector, mainly oil. And I got stopped out of that. I had a very tight stop, but I got stopped out of this. The medical sector seems to be the only one that's really doing well. Another area, if you want to go long, and I'm not long anything right now, would be McKesson. MCK is the symbol for McKesson. This is one I think you definitely should look at regardless. This is showing a lot of strength. And I do think that this, in a depression, is going to hold up. Now, I say depression, not recession, but I don't know if we're going into a depression, but I think we're going in some tough times. And in tough times, not everybody is going to be able, not everyone is going to survive in tough times. And I'm not saying that we're, you know, it's the end of the world or anything, because it isn't. But you know, the next few months are going to be tough, and so not everything in this market is going to do well. So if you're going long, you've got to be really careful, because you've got to get things that are going to have a definite market. As you can see, you know, Amazon is retreating in this market. So even Amazon is an extremely strong company, is retreating. We've got to go with the sort of the uber strong companies, and I definitely think McKesson falls into that category. It's the largest drug distributor in the world, and if you'll notice the relative strength line, this is that blue line here, moving up, and it doesn't even show the S&P 500, but believe me, S&P 500 is moving down. This is moving up. It's 98, so this is in one of the top groups right now. Medical wholesale drug suppliers. This is one, I think, you know, if you're going to go long and you want to put your toe into the water, this is actually very well positioned. It's in a consolidation. It's coming up to the buy point. The buy point's 338. I wouldn't buy it above the buy point. In this kind of market, you've got to buy in anticipation of it coming through the pivot. So this is not a bad one to look at right now. I don't own it, but I don't own this one, but it is definitely in an upward trend. All right, thank you that very much, Lisa. Let's look at Hershey's. I did close my spread on Hershey's. I decided that that I was going to just close it instead of pushing it out further. And of course, the very next day that I closed my spread on, I looked at it and say, I'm going to close my spread. It pulls back and it's finally starting to react the way I thought it was supposed to. So if you're still open with the Hershey trade, you're in good stead. Just we can probably push that one out. We can roll that one out. I did close it. I did close it for a loss, unfortunately. And of course, the next day, boom, it pulls down and starts to make its trip the correct way. So go figure. It's always like this. I shorted it too early. I needed to short it up here. But I do believe this is the reversal line on it, that even Hershey is probably going to move lower. Now, with Starbucks, I did adjust the trade. I did adjust the bear put spread out on Starbucks. Starbucks is starting to behave correctly, in my opinion, and that, of course, is that it's moving down. And of course, with a bear put spread, you make money as the stock goes lower. So that one's starting to work. Finally starting to work, and I think it will indeed move lower. So those are the two things. Starbucks is the better short than Hershey. They're both going lower. All right, thanks for that. Let's talk about the TLT, and this is the bond fund. TLT. This is the ETF, the TLT, and the way this one works. The way this TLT works is it is declining based on the fact that the U.S. Treasury bonds. Now, here's the strange thing about Treasury bonds. You probably remember this from your finance class. As the interest rates go up, or the expected interest rates go up on a bond, the value of that bond goes down. So it's inverse. So it's very odd. So with this one, I wouldn't recommend the TLT because that is going to be moving lower. If we expect interest rates to go higher, which I do, this one will go lower. But there is another one that's inverse of this. This will go higher, and that's the TBT. Now, I'm out of the TBT. I did some profit taking on this position. It is pulled way back to the 21-day line. I expect this thing's going to go higher. I think we're going to get a reversal here. I wouldn't buy it until I had a blue bar here, but this is the TBT, not the TLT, the TBT. I do believe this one is probably likely to go higher. This is the inverse. This is called the ultra short 20 here. Basically, what this is this is shorting the long bond, and the long bond is, of course, going. The interest rates are going up, so the long bond value is going down. It's kind of weird, but the TBT then flips it on its side, and this one is getting ready to possibly be once a good again. But if you'll notice on this relative strength chart, we were going up very nicely, and I don't have my mark in here, but I did sell it when it pulled back. When this relative strength line started to move back, I sold because this is what's controlling that. And unfortunately, you can't see this on the feed on TikTok. I don't have the capability of showing it. I'm showing this on YouTube. And then once this did, then it pulled back. But I definitely think we're going to see it upward tick. But I wouldn't buy this one now. I would wait for a bounce, and the bounce is going to probably come off of that 50-day line. So that's kind of what I'm looking at anyways for a bounce on that. So thank you on that as well. Let's look at TJX. I like your thinking, Charles. I like your thinking on that. TJ Maxx is a retailer, and retailers have been very, very weak. And so I think that, it is getting time to start looking at some of those retailers, because the consumer confidence is some of the lowest it's been, unfortunately, since the 1970s. And I'm old enough actually to remember that, believe it or not. I'm getting old. But very weak consumer sentiment here. And so you're looking at the right things possibly to look at. Now, the question is how to pick a good short. It's not easy, believe me. We want to find things that have been top performers in their area, but now are not doing as well. Now, so the question is TJ Maxx that candidate? Well, it possibly is. It hasn't fallen more than 50%. You don't want to short anything. You don't really want to short when it's falling from about 80% down to about 50% of its high value. So that definitely makes that. You also want to short something as it's moving up. I know this is weird, but you want them as it's moving up to the resistance. So here's the thing. I think you could short this one, but I would short it at about 60. And the reason I would, and I don't know if you can do this now because it's starting to break down. You want to come down, rally like it did here, rally up to that either my favorite is the 21-day line. That's this green line. Rally up to that 21-day line, and then when it hits that 21-day line, that's when you short it, because it needs. Right now, it's in a downward trend. We're almost 5% below the 21-day line. So therefore, we want to short within 5%. I know this is very technical. You want to short within 5% of that 21-day line if possible. We're currently almost there. We could short here. We're just almost out of range. So we kind of want to wait to do here. So we want to wait for it to make a pullback up. You see it did 2 days ago. It did 1, 2, 3, 4. You see it did that a few days ago. It pulled up to that 40-day line. And then, boom, it went down. So we want to see this move direction again, pull up to the 21-day line right about here, and then move lower. So here's the thing. I would say if you're thinking about doing a short on this, and I don't actually borrow the shares and do the shorts. You can do it that way, but it's a little bit high risk for me. What I like to do is I like to do the bear put or the bear call spreads because that limits my risk. But if this thing moves up to about 59, and we're currently at 55. So it's got to move up about 4 points. If it moves up about 4 points, that's where I would consider putting the short on, because that's going to give us our best leverage, because it's going to come up to that resistance and it's going to move lower. And then if it moves lower at that point, then we've got a really pretty nice setup for a short. So that's what I would recommend. 59, 55, 58 or 59 on that. And then if it pulls up to there, then possibly short it. You're definitely looking at the right thing. CPB. This is for Brian. CPB. I hope everything's well with you, Brian. I think you're in New York. And so I hope everything's well there. It's really been hot here in Dallas. So if you're looking for cool weather, this is not the place right now. I'm going swimming right after this. Campbell's soup. Boy, this is interesting. This is really talk about a very safety play. This is definitely. I had some V8 this morning, so I like this company a lot. I do like the fact that we have a relative strength line that's starting to see some more power, and it's moving up. Would I buy this at this level? I'm just not really right now. I'm very, very leery of everything, but you're looking in the right place. Packaged foods typically does very well in the recession. Definitely has it. It's been moving up. So, I could consider going long here. Really right now, the only stock that I really like long is McKesson, MCK. But this one, I would put this on the watch list. I probably would not jump in on this one. I know it has good earnings. It's in the right area for a recession. Consumer staples typically do well. I mean, leisure stocks don't do well, but Campbell soup and stuff like that, stuff that you can put in your pantry, that does well in a recession. And definitely starting to show some increases in sales. Not really a very exciting stock, in my humble opinion, but definitely moving up in terms of the profits. So the question is, can you buy it here? It's got a 17 PE, so that's fairly low. Now, normally I don't look at the PE that much. I'm more of a, I'm more of a, Nasdaq guy, but in this market, Nasdaq stocks just aren't doing as well. And this has a 31% return on equity. So I think this is a potential kind of, I wouldn't buy this one though. And I know this is so frustrating because here I am saying every time you're watching me, oh, I wouldn't buy this one, and it's frustrating. But I would watch this. I would watch this as stock. I'm not ready to buy it right yet, but I think the camel soup is definitely, if you're going to go long in this market, that is probably one of the best ones that you can go. Also, James Smucker, by the way, that one does very, very well in recessions as well. That one that's a symbol you might want to look at as well. James Smucker. Of course, they make jams and jellies and all that kind of stuff. All right, Jim. How low are we going? Good question, Jay. I wish I could pull up my crystal ball and tell you exactly, but I have an idea. And the idea here is that we need to look at the spider. That's the one that we really need to look at, because I think that's what's telling the tale more than any of the other indexes. And that is, the spider covers the S&P 500, and this one, I sort of have a theory about this one, is that we hit our high up here on the spider, basically back here in right at the third week of December. Basically 479 was that tie. Then we came down like that. That was our first leg down. All right, then we had a relief rally. We had a relief rally, and that put us into basically the first week of February. Then we had another downward leg. This is our second downward leg of the market, and that put us into basically March. Then we had the relief rally again up here. Again, nothing goes down a straight line. It just kind of goes like this. Then we had our big decline, and that put us basically at the beginning of May. We've had another leg up here. So this is 1, 2, 3 legs down. This is our fourth leg down. And then we had our relief rally. Notice how these are getting shorter each time, but I do think that we're going to come down. I think we're going to come down hard. My guess is we're going to come down right to about here. And this is where I think we're going to get our bottom, about in the September timeframe, October timeframe, at about 320. That's kind of where I'm looking at it. And I've looked at some other charts, so I don't have all those, but some of these are, the thing to do would be to look at if you're into the Elliott wave theory, that's a kind of to look at that to give you some idea of the bottom. But I do think that we're looking at about 320. I think we're looking at about 320. And I think we're looking at that September, October timeframe. So right now we had a dead cat bounce. We're coming back down. And I do think that this time it's going to be about equal distance to the last leg down. The last leg down was about, if you go from 420 down here to 360, it was a little over 100 points. So that's why I think this time, that's why I'm looking at about 320 there. So, but it's all a guess. It is based on a little bit of stuff, but it's still a guess to see. It just depends on, if we get pumped. Here's the thing: don't fight the Fed. They always say that don't fight the Fed. The Fed's going to raise rates. So whereas during COVID, every time the market went up, they kept the rates low, they cut the rates, so it just blasted it up. This time, every time the market's going to go up, the Fed is going to sneak in some interest rates hikes, because they've got to get inflation down, or else the current administration loses the election. So, but they're fighting two things. And I believe that, we're going to see, it's just not going to be that good. I mean, it's going to go sideways or a little bit down. I think it's currently trending down. The key level, I believe, is about 320 on the spider. But, again, this is absolutely not an exact science. So I would say about 320 on the spider is what I'm looking at. All right, let's look at a bear put spread on ZTO. Now, as you know, I love bear put spreads because it limits our risk. But you can, they don't always work. They don't always work. One of the things about this is typically a bear put spread works better on a stock that's higher in price. This is a fairly inexpensive stock at 27, and it's been trading below the 200-day line for a while. This is not a great candidate for a bear put spread. It's a little bit too volatile for me. So what I would consider, and I know this sounds kind of bad, but this is not, I don't think this is a good candidate for a bear put spread. What you want is a larger stock that's kind of lumbering. Now, one of the stocks that I have shorted before with a bear put spread, and I continue to think is going to be weak, is Boeing. This is one of the ones that I do think is potentially a short. Now, I haven't put a short together on this one, but I do think that, it has rallied up. You see, it's pulled down. See, obviously, the best time to have shorted, and I don't have my marks on here, but I did short it. The best time to short it is when it comes up to the 50-day line. It's come up there once. See, it's come up there once, twice, and it just went to the 50-day line 3 times. Okay, notice how it's rallying back up to that 50-day line. I do believe we're going to see some weakness here, and I think that this easily could fall from about from about this 135, 136 area all the way down to about 113. I think it could go all the way back down. I think it could go like that. So I think that this one is shortable, and I think this is a superior short than like ZTO, because first of all, this is a real company. This is in the Dow, so there's a lot of liquidity here, and I think this could do quite well. The trend, if you'll notice on this blue line, the trend of the relative strength has been downward. We want to look for stocks that have been good but have a downward trending, not only price line, but relative strength line, and that's definitely the case here. It's rallied a little bit. You always want to short it on the rally, and that's kind of what's happening here. This has been rallying up here, and I think it's going to get weak here, and then I think it's going to poop. I think it's going to move down. So this one might be a good option. Boeing, BA is the symbol on that one. So this is probably the last question. Thank you for listening to my yammering on here. Let's look at Arch, and the Arch is the big coal stock, and there's still huge demand for coal, primarily in China. But would I buy this one now? Well, it's been a great performer. This has been an awesome performer since the beginning of the year. Let's compare Arch. I want to compare Arch with a tech stock. Let's look at Arch and Apple. So I'm going to take a look. Let's see if I can do it. Okay, it's letting me. All right, so let me see if I can. All right, Arch and Apple. So let's look at Apple there. Okay, so this is really interesting. This is kind of a graphic thing. So let's look at. Let's see if I can make this work. Sometimes I can't make this work. Let me see if I can pull this up. This is really telling. The difference between Arch and Apple. So let me see if I can. All right. Let me just get another window here so I can pull this up and just type in. And then I'm going to do this this spread again here. Hopefully, there we go. Okay, so there. Hopefully, we can see this now. Arch. And oh, that's good. Okay, so this is looking better now. Okay, Arch and Apple. So this is the reason why we don't want to be long. There's Arch. All right. Let's see if it'll show it to us. There. Okay, this is really hard to see, unfortunately. But I'm going to show it to you. This is probably the last one I'm going to show. So, and I don't know if you can see this. It's really, really dim. But right here, this is Apple, and it's a yellow line. I don't know why it shows that yellow line. But let's see if I can add it again. Let's see if it'll give me a different color. No. Anyways, this is the line for Apple. So this is Arch Coal. Look at that. Since the front, and this is Apple. Isn't that amazing? So that shows you the difference. So you're definitely looking in the right place in the market. But I think the thing about this cheat is that, I don't know if it's going to continue on this way, but and I don't think I would buy Arch at this. Just wait for a base on this one. So that's kind of what I would do. All right. Well, I have gone past my time. That gives you the kind of the comparison chart between Arch Capital, that's the top one, and then Apple. And you can't see it because unfortunately it's a yellow line here, but that's Apple. So if you start at the beginning of the year and you put $100, you'd be great if you did Arch, and you'd be terrible if you did Apple. Just go figure. So that's sometimes what happens in the market. All right, I'll be back tomorrow on Friday. Now, here's the thing about Friday. Be the last day there is going to be a holiday. The 4th of July holiday is on Monday, so the markets will be closed. So I won't be here on Monday. I'll be on Tuesday, but I won't be on Monday. But I will be back, of course, at 5 o'clock on Tuesday. Of course, I'm going to be here tomorrow, so not to worry there. But I'm going to be. But the 4th of July is coming up, so that will be a holiday on Monday. Kind of weird. I think the 4th is on Tuesday this year. So the holiday is on Monday, which is the 3rd, and the holiday, the actual 4th is on Tuesday. So go figure. But anyways, but we will be here tomorrow, absolutely, at 5 o'clock, and hopefully we will be able to do some more charts. All right. So if you're not already a member of the Action Trade Alerts, please, 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 I would appreciate it if you did. Go ahead and sign up for that. First and last name and email address. Also, really, really appreciate if you could like the video. That really helps me a lot. And until tomorrow, everybody, happy trading.